Welcome to our weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we're going to take a look at will be the Australian US dollar. There's the Australian US dollar. Here's a daily chart, and you can see we have a band of support there. I usually look for support a little bit below that GAN line, that 625. But you can see that the support line's holding, and what's most important about this chart is it's holding the pattern of higher lows, higher lows, higher lows. So you got to disrupt that pattern, and as we've been saying now for many months, that this bull move is still intact from our perspective, and very simply it has a pattern of higher lows, and our upside target's been 96 even, and we think you can even you could stretch that, and if you get beyond that, you can have a blow off here. Markets get slow, volume drops out, and this market becomes susceptible to a blow off then. And I think at that point, from a historic perspective, let's pop out to weekly, we'd be interested in a topping formation. Yeah, somewhere in this area of the chart right here. We see the long-term pattern here is bearish. Intermediate though, short-term, back to the daily chart, we still think there's some more upside there. Next market we'll take a look at be the dollar Swiss. Dollar Swiss in an interesting place because you're looking at a potential historic bottom here. It's got a clear resistance first though. You're back up against that RTT level. You're back up against resistance again. And if it can claw through there, you get a couple closes above that. You get successive closes above that level. That's a big deal. It'd make buying dips a lot more attractive than they currently are. When I say a historic bottom, you had a pattern of lower highs, lower highs, lower highs. And then what do you have here? That's a higher high, right? This is a higher high to that high. So potentially you have a new higher low. The first higher low, that's going to be the best place to buy in a new bull market, right? That first higher low. Before you can confirm that, though, you're still going to have to take out this important level at 90 even. So if you get successive closes above 90 even, buying that dip again looks pretty darn attractive. If not, you're in a funny time of the year. You're getting in the dog days at Trading University. We're actually on our summer break right now. Wouldn't surprise me. You go back down and you test this level again. Either way, we see this market at a historic crossroads. The U.S. economy's got a pretty good track record of coming on strong when it goes back to school, so to speak, in the fall. So we'll have to see. Here's a weekly of the Swissy, and there's a snapshot of this this budding bull market potentially. And you see 90 is critical. If you can claw above 90, you've got a lot of upside on there. And we see that upside breakout of 90 even being dependent on economic activity in the U.S. going forward. Dollar index, you're going to see a very similar pattern. Let's start on the daily. Here you can see you broke the pattern here, the intermediate term pattern of lower highs, lower highs. Boom, you put in a higher high in the late spring here, a higher high to that high. Now you've got, perhaps you've set an anchor point here with this higher low right there, and that's what we look for, a switch from market, a bearish pattern to a bullish pattern. So potentially you have the switch here. It's similar to the Swissy. Either you're going to keep going, you're going to record a breakout above 81 even, or potentially you back down into that zone one more time, this zone being critical right here. So yeah, this is going to be a big deal. Here's the dollar index, the weekly chart. You can see that you got all kinds of support below, and if the U.S. economy starts to gain traction here, it's been slow going this year for sure, but if it does catch a headwind, you got the potential for a big breakout here. And here's the advantage of the slow U.S. numbers you've had this year. If economic activity picks up even a little bit, it's going to look great compared to the poor economic numbers we saw earlier in the year. That could light a fire here, and we could see a bona fide breakout in the dollar, and we've been talking about that for some time. Next market, the euro US dollar. Well, it's an old chart here. See that long-term primary patterns lower, our RTT level. You see what a great level that's been to hold. Same story. This is a weekly chart. Let me pop down to a daily chart. Mirror image of the dollar. Really, there you made a lower low here, and that's good. That's important. I'd really like to see him take out this low though here. At any rate, it looks like you do have a bona fide shift here in that this long-term pattern, the daily at least, has definitely reversed it. You can definitely make a case for a reversal in the euro already. We're definitely aggressive about selling rallies in that euro. We think you're looking at a sea change move. In other words, you're looking at a permanent shift here from a bull move to a bear move in the euro. Next market, we'll cover the gold market. Last time we looked at gold, it was kind of in the barbed wire, so to speak. I think I had a GAN line up there, if not a 618. To me, 618 is a little bit short term. I like it going beyond that. Our own RTT level, that's a proprietary level. It's a little bit beyond 625. There it is right there. You can see how it kept the lid on the gold market. And the bottom line here is that since the gold market collapsed here and put in this high, you're seeing a succession of lower highs, right? Lower high, lower high. So this is just another lower high in a chain of lower highs. You could say, sure, the gold market's been sideways for the last year or so. We think that pattern is telling, so we think you'll most likely see lower prices. Gold's a commodity. Speaking of commodities, there's a commodity I want to show you right now that it's going to be pretty influential. This is the corn market. And why is corn so influential for us? Because it's energy. This is ethanol. Corn is where we get our ethanol from. Look at the price of corn really having collapsed into the growing season. This is very important. Ethanol is going to be a lot cheaper vis-a-vis energy costs are going to go down, not to mention food costs. So, when you talk about inflation, you're not going to have any inflation if you have lower energy costs and food costs. So corn, very important market to cover for us. You're seeing much lower corn prices, i.e. you'll have no inflation on the economic front. And that's also going to be bullish for the dollar. When commodities go down, that tends to be very bullish for the dollar index, the U.S. dollar itself. We'll cover the crude oil market real quick also. Here's a daily chart of the crude, and here's another one where a very stubborn up move. Over the last year, you've had a stubborn up move in the crude oil, but look at this now. From a historic perspective on this daily chart, you take that high in 2013. This is a lower high historically. Now we drop down a little bit lower here. Potentially a lower high here could signal the end of this secondary bull run here. So this is very, very important to us. If the crude oil puts in a lower high here, breaks down, puts in a lower low, that will definitely be dollar bullish. That will signal an end to that bull run in the crude oil. And that's going to be great for the economy, the global economy, particularly the U.S. economy. So crude oil, definitely one to watch. We're looking at this area on the chart. If you can break 98 even or so, that's going to signal a shift to a bear phase in crude oil. That's going to be very bullish for the U.S. economy, very bullish for the U.S. dollar. Last market we're going to take a look at, the dollar yen. Shorter term, the dollar yen's had some great sell setups as it settled in here and started putting in that familiar pattern of lower highs on the way down. You've had some really good short-term selling opportunities, but nothing's changed. We're still singing the same tune here. If we like it at 101, we love it at par. So we think at some point the dollar yen in here shows in a support zone. We actually like it below par. There we'll have to see, but this market's been very boring all year long. It's in a sideways range, and we think overall, though, that once that sideways range is done, which will probably be marked by a false breakout to the downside, you get a false breakout to the downside, drill all the stops, and if you get a quick turnaround, that's probably when you want to go long in that market. So we like dollar yen on the dips. Hey, thank you so much. I'm going to leave you with these words of wisdom from my old friend Bill Williams. We cannot outthink our problems. We have to outgrow them. That's so true, particularly in trading. You're never, ever going to get away with forcing things. The only way to get over things is really to get past them, get under them. Just time, time and growth. And, the things that were so important to you that you couldn't seem to get past, they'll just fade away when you learn to outgrow them. Okay. Hey, thank you so much. My name is Jay Norris. I'm a trading instructor at Trading University, and we'll see you next time.